What is going on, y'all? Just going to be doing a little bit of weekly analysis today. It is Saturday, December 21st. And today we're going to be doing some analysis on gold. Well, gold is not a pair I currently trade. It's definitely a pair I want to get into trading. I'm going to have to look into a different broker to do that, just to kind of give me more options in my trading, it's kind of hard because I really like Alanda as a broker, which is my broker right now, but they don't offer things like gold, oil, Bitcoin, Ethereum, stuff like that. And I often like to practice my strategy on like things like oil, gold, natural gas. And I like the way that, specifically gold and oil move. But just getting away from that, we're going to get into the analysis. We're just going to start as we always start on the weekly time frame, right? If we're looking at the weekly, we have 1, 2, 3, right, up the top, and then 1, 2, looking for 3 of the bottom, right, forming this larger ascending channel. And while, definitely we got this strong move up and impulsively and everything like that, having to do with probably, this was May, June, July, that time in the summer when the stock market was kind of tanking, which is often a nice thing about gold, and that being like it's a negative, it's an inverse correlation to the stock market. Basically, what that means is as the stock market like tanks, gold will do better, and as gold tanks, and as the stock market goes up, gold won't do as well, just because gold is seen as what's called a safe haven asset. So basically, when investors see their stock market portfolio not doing as so well, they run to put their money somewhere else, somewhere a bit safer, into what are called safe haven assets. Things like the yen, things like the Swiss franc, things like gold. Actually, the dollar has become one now, and that's something that like economists and finance people argue all the time about the nature of the dollar being a safe haven asset and actually how bad that is for the global economy. But that's a different story for a different day. And then also Bitcoin, is becoming more of a safe haven asset, and people are moving more away from gold and more into Bitcoin. But again, different story for a different day. Getting back to the analysis, wow, we don't have any like real daily structure right here that we can see, because all we're seeing right now is an impulse, correction, impulse, correction, impulse. We are getting on the daily this first flag correction. And the area that we're getting it in and the nature of the flag correction is very important. Just for me wanting to say, this isn't one that I'm just going to say, oh yeah, I'm going to take this for a buy for sure, because we have, basically 1, 2, 3 touches of the bottom in this flag correction, because ultimately we have to look at the type of flag correction that it is. And that being, if we boil down to the 4-hour, that being one of 2 things. Two important things, not one of 2 things. 2 important things. So if we're looking at this impulse that got us into this larger correction, if we're looking at this impulse right here, we can see that for the most part, the impulse, the line, is about the same size as these lines that make up the correction, right? And as mentioned in previous videos that we've posted, when an impulse or correction is as large as the impulse that got it there, the pattern can become more neutral, right? It doesn't have to play out in the same way, or it never has to play out in any way, shape, or form, because the market can do whatever it wants. Something I often try to tell myself is the market can stay irrational longer than you can stay solvent, which is basically a saying the market can do whatever it wants until it knocks you out of all your money. So if you don't believe that the market can do whatever it wants, you're probably going to have a bad time here and there. But getting back to it, the pattern just becomes more neutral and can become more probable to move and push back down to the downside, right? And then on top of that, if we're looking at this larger descending flag correction with the most recent 2 touches of the bottom, 1, 2, and then most recent 2 touches of the top, also, clean this up. But that all makes sense anyway. We're seeing 1, 2, 3 touches of the top right? And then also within the flag pattern, the other important thing that I was talking about that makes me want to be more on the ball, and actually be willing to take a chance to the downside on gold had I if I were to trade it, is the fact that we're seeing this, right? Do more of this roaring channel type formation. I'm just gonna clean this up, make sure it's correct. I'm gonna show you what's important about this formation. I'll just pull this back a bit. All right. Because even though the nature of the market is to move impulse, correction, impulse, that is the nature, and that is what we're seeing right now. Looking at the correction, and one, the size of the correction, and two, what we're getting inside the correction, I'm willing to, take a possible chance to the downside here. And the reason is what's called a running channel. So essentially, at the end of descending corrections or ascending corrections, this time being a descending correction, you can get at the end of it an impulse and a correction going the opposite way. So this time it's an ascending correction, right? So it's an impulse bear flag correction. And that's exactly what we're getting now on gold. And basically, what that means to me is, while this pattern can definitely still play out, right? This pattern can definitely still play out because, again, the market can do whatever it wants. The market doesn't have to do anything. Because at the end of the day, the market is just a conglomerate of all the traders that are participating in the market at that one time. And so no one price pattern is ever going to be the same as any previous price pattern that you've seen in the past. While they may look similar and you have a strategy that gives you repeatable patterns that have an edge, and you just, like a casino, you try to play that edge and give your strategy a large enough sample size to, work out in that edge and, show you the expectancy that it has. You have to think about the fact too that, again, no one moment in the market is the same as any other previous moment in the market, right? And so that being said, and also with the running channel that we're seeing, I'm willing to look at gold for more of a continue to trickle higher, fill this wick or liquidity, because it's not really a wick on the 1 hour, but if you look at it on the 4 hour, it would definitely be a wick, right? And I'm just gonna pull this away this way. Ultimately, fill this wick. Fill this liquidity, because that's all that wicks are. Wicks are literally just liquidity within the market. That's often why you see, people talk about the wick will get filled, stuff like that. It's definitely, I'm not saying, again, it's true all the time, because it's never going to be true all the time within the market. That's not a thing. Anybody who tells you that's a thing is lying to you, or they just don't understand the market well enough. But it's often that you see wicks get filled because there are areas of liquidity within the market, right? And so you would see this, kind of trickle up like this. You could see a break down lower, correction, break down lower, correction, and break down lower. And here's the important part about the running channel. Although it does point to the downside, you still have to take into account the fact that you are within this larger descending pattern, right? So we could see, if we just pull this out a bit, we could see price push down here and reject off this double bottom area, and then correct, push higher, correct, push higher, ultimately completing the larger descending channel that we're a part of right now, right? Or we could see price push lower again, and then reject off the bottom of the trend line, third touch of the trend line, push higher. Not saying it's going to be that strong. Push higher, correct, push higher, ultimately, again, breaking out of the pattern to complete the pattern for the 90% rule. Complete the pattern for the 90% rule, right? And so then if we look at it again, it's still good, you know, for anybody trading gold, just because we are in this larger ascending correction. So if it does want to continue higher, that doesn't mean that a sell isn't still on. It can kind of just keep correcting higher, correcting higher, correcting higher, and then break out, right? And break lower, because again, the higher time frame momentum is pointing to the downside. But that being said, you know, with us getting the running channel right now, we don't have to go all the way up there, up to the double top, up to a third touch or another touch, not a third touch, but another touch of the top of the ascending trend line to get that move higher. Because again, we are getting this running channel to the downside, right? And so that's why I'm going to be on the ball for how oil wants to move out of this ascending correction, within this descending correction. Again, price can do whatever it wants. Price could literally just, you could get there next week. And while I don't think it'll happen next week, because next week is a shortened trading week, this being December 21st, you know what I'm saying, and Christmas being on Wednesday, it's going to be a shortened trading week. So the volume and liquidity in the market is going to be much, much lower. That being said, price could, again, do anything it wants, and price could literally just break out, correct, break out higher, correct, ultimately to move higher. And then at that point, that's perfectly fine. We're just going to start looking at this area up here for the double top to see how price gets there. Not use the paintbrush tool. See how price gets there. Or where you could look also at this area, another ascending channel. Or if price wants to say, you know, forget all of that, forget this double top, forget this ascending channel, because again, price can do whatever it wants and break out of all of it, right? Again, I'm not just saying it's just going to move straight, but just for, you know, example's sake and time's sake. If it wants to break higher, then we're just going to be looking at the first tight correction that we get after the impulse, right? After the impulse higher, right? And that, I think that's the core of why I like Falcon so much, is it gives me a way to not really worry about what price is doing, because it doesn't really matter to me, because it's like there's always a way that if it fits my plan, I could take a trade, right? And even if it's in my plan that even if I'm in an ascending channel or a descending channel and it breaks out higher and price doesn't respect the ascending channel, I can take that first tight correction. And it's not just because I want to, but because I've tested it and verified it and backed it up with data, right? And that's the ultimate most important thing, right? Having something that works with your psychology, and that you're only going to have that when you have something that you have tested and verified. And that's the biggest thing that I would say to anybody out there who's trying to get into Forex now. Focus very heavily on back testing. Like back testing needs to be your best friend, even if you hate it. It needs to be that best friend that tells you, you know, when you're wrong, even when you don't want to hear it, right? And it was nice. I was recently doing back testing and falling more in love with it again, as I did with my previous strategy, where I really like fell in love with back testing. So you might fall in love with it, you might not, but it's one of those things like, you know, let's say you're an athlete and I used to be a soccer player. Let's say you're a soccer player. One of the things that you have to do as a soccer player, even if you hated it, and I hate it, is run, right? Run without the ball. Like you just have to be able to like get on the track and do some laps around the track, right? And even though I hated it, every time I would go out to practice on my own for soccer, I would run first and I would run after, because I knew it was important. And backtesting is the same way. It's one of those things where you may not love it, but you have to do it. So when you get in the market and the market starts acting erratic and doing whatever it wants to do, and then it presents you an opportunity, you know, a defined opportunity, like, you know, defined within your trading plan and everything like that, and it's tested and backed up by data, and you take those opportunities and you lose 10 trades in a row for whatever reason, because again, the market can do whatever it wants and no pattern is ever repeatable. You trust yourself, you trust your system, you don't lose faith in it, and you continue, you know, going with it, right? And so that's honestly the most important thing, you know. I hope you enjoyed it. Hope it provided some value to somebody out there. You know, again, just wanted to get out there and document my journey. So yeah,